we are very pleased to have the guest that we have today. This is a person we've known for a good many years, and he was telling us the last time he was here to talk to our students. One of the students who was sitting at the table is now a partner of his. But this is, as many of you know, this is Paul Ellis. His current position is as president of the CNL Commercial Real Estate, and I'm sure he'll give you a better sense than I could of what that's about. But prior to coming to CNL, he spent about 15 years with the extremely prestigious Trammell Crow, and he built the largest property management company in Florida. They had something like 35 million square feet under management. That's a staff of some 200 people. He went from there to another major firm, CNL, in Florida. And during that time, he has been a loyal, supporting board member. And we're delighted to have him come back and share his experience again. So, Paul, welcome back.
Thanks. Yeah. So as I was saying as we were walking out, apparently that may be an indicator of how good I am at these presentations, because the last time I was here sitting around, we sat at 2:45, we sat around with some of the students, and no, I think it works. Yeah, working now? Yep, okay. The last time I sat around that table with some students, one of the guys that was sitting there was Paul Reynolds, and he's now a partner with me in our firm. So it was kind of a little bit surreal in that sense. So I am glad to be here. UF means a lot to me personally. I'll talk a little bit about my career, but I owe a lot. When I was here, I was one of the last guys to graduate with an undergraduate degree in real estate. And I would tell you that a big reason I was able to get into appraising, I started out as an appraiser. I was able to move so quickly was because of Hal Smith, who was a professor. Does he still teach? Is he still? No, I mean he's not around. Okay, well, yeah, he was my professor, and I would tell you that class was probably the one that kind of really got me excited about real estate. In fact, I wrote him a note after I graduated that said, I wouldn't be where I am right now if not for what he poured into us as students. So I'm excited to be here. Let me start off with a couple of things. Number one, and the subject matter that we're going to talk about is really an industry overview, and I'm going to talk a little bit about our industry, the commercial real estate industry, and really talk about maybe some advice on how to get a job and kind of what people are looking for and how the system works, if you will. But this is going to be a heck of a lot more interesting if we have a dialogue than me just standing up here and lecturing. So I'm going to really try to encourage that if you have a question or you want to stop and talk about something, I really would like this to be about what's of interest to you. And if you don't, I know two guys in here, Mr. Goff and Mr. Talby, and I'll just ask them questions. So if you guys don't ask questions, I'm going to ping them. But I want to start because I can tailor this discussion around the group, if you will. And I want to start by getting a sense of what you guys want to do. And so, I don't know, are you guys still doing the tours where the students go around to the other cities and kind of meet? Because I remember about 10 years ago at Crow, we would host the classes. And so this was pre-2007, 2008. And we used to start out that session where I would ask the question, and it was probably this, it's been about the same number of students every year, somewhere around 30 or 40 students, I think, that would come through Orlando. And they'd all be sitting in a room, and we'd start off the question that's saying, basically, okay, everybody, by a show of hands, who wants to be a developer, right? And if there were 35 kids in the class, 34 of them raised their hand. And, there was one guy in the corner, and we'd ask him what he wanted to be, and he said he wanted to be an appraiser, and then everybody would laugh at him, and we're going to be developers, and you're going to be an appraiser, not knowing that I started my career as an appraiser. So I'd like to do is just really quickly go around the room, and I want to get a sense for today. Okay, if you could, when you graduate, when you're finished with this program, if you could kind of write your ticket and say, this is what I want to do. As well as you know right now, I just want to get a sense of that, because that will help me as we talk about the industry. I can spend a little bit more time on certain sections if there's a general trend that we're seeing, okay? So can I go around the room and just find out what you all are looking to do when you graduate? I'll start at the top. You're already doing what you want to do, right? Yeah. Investments, so acquisitions and development, okay. Same, okay. Development, so building product type, any particular product type, or just development? Huh? Okay. Stay up at the top. Okay. Brokerage or? So for an owner. Okay. Okay. Everybody wants to be the owner until you know what that takes. Finance? Debt equity? Okay. Okay. Go ahead. Okay. Drop down. He's already doing what he wants to do too, so. Transactions? Okay. Okay. Law? Okay. 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 That's pretty specific. Okay. You listened this morning. Yeah? Okay. Raising equity. Okay. Okay. Developer. Developer. Okay. Investment sales. So brokerage. Okay.
I'm interested in commercial leasing and doing either that or acquisitions, dispositions, like due diligence associated with that.
Okay.
I'm already a lawyer, but I'm trying to keep that as a hobby rather than.
Okay. 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 You want to work for CNL, right? Yeah, okay.
Debt equity, capital placement, or real estate bond.
Good, all of them. Good. Say that again? Okay. Okay. Owner investor? Okay. All right. It's a little bit more diverse than it used to be, which is good. So I'm gonna. I appreciate you doing that. That's very helpful, which is good because I can talk about the breadth of the industry and what have you. Because what you'll find too, and you can kind of see it just in the vernacular you guys threw out, the way people talk about our business. It's a web, and I'll show you that web here in a minute. But the terms that people use and the way that people talk about certain parts of our business, there's a lot of nuances to it. And so I'm excited because there's a lot of diversity here, and I can hit on a lot of those aspects because, as I'll tell you here in my career, I've been very fortunate that I've lived across a pretty broad set of roles. And while this career today is 24 years, 23 years, today I've still only had 3 jobs. Okay? But I've been very fortunate in some sense when I started my career because much like what we're seeing today, I started after the last great financial real estate collapse back in the late 80s and early 90s. And because of that, wherever I ended up, I tended to end up at a place that was resetting and growing, and so I was able to kind of ride the wave up, if you will, and it resulted in a ton of different roles and responsibilities, but I never had to change companies, and I never had to change locations, which, by the way, is very unique. I think the reality of it is, within my peer group, a lot of my peer set had to move, had to change locations, had to change companies. I never had to do that. And plus, I ended up being with some pretty great firms, CNL included, and quite frankly, I had the great wisdom to make only the third change in my career during the during the greatest financial collapse of our lifetime. So when I moved to CNL with our team in 2007, a year later the train ran off the track, which again created a lot of opportunity for us. So distress and change in the marketplace generally will create a lot of opportunities, and we'll talk a little bit about that. But real briefly, my career, I started out, as I was telling the guys this afternoon, I started out as an appraiser, which is a tremendous experience because it got my head into understanding real estate, and it really allowed me to kind of sink my teeth into valuations. And there's the textbook process that you learn here, and it's certainly a lot different today than it was when I was valuing real estate back when I started my career. The access to information was not easy. You were going down to the courthouse and you were looking through microfiche and digging through data, and you really, we talk about appraisal as an art form. There really was an art to it because you really had to dig and sink your teeth into it, and it built in myself, and I would tell you, even today, the best developers are the individuals that don't just take the market stats for granted. They really dig into what's going on on the ground in real estate, and that was kind of the skill that I learned as an appraiser. About 2.5 years into that, though, I got to a point where it was time for me to move on and complete my MAI demonstration report and get that designation, and I realized that I loved commercial real estate, but I really didn't love appraising. It gave me a great background. It gave me a great training field, but it wasn't. I clearly could see that it wasn't going to be what was passionate for me, and so subsequently, a buddy of mine here from UF called me and said, "Hey, I know you're out there thinking about new opportunities. These guys at Trammell Crowe." And if you know that name, back then it was a legendary development firm. It was a pretty neat place to be, and it was very, very difficult to get a job there. And so I basically, cold called them and beat on their door for 4.5 months, and they finally hired me. And I think they would tell you that they hired me because I just wouldn't stop calling. And there's a lesson in that. Persistence is a pretty valuable attribute to have in our space because you will hear no more than you will hear yes in whatever you're doing. So started out at Crowe as an analyst, and again, this was before, it just feels odd that I'm saying these things. It's just before the days of the internet and all the stuff that I know. I don't feel that old, but it was before access to information and was like it is today. And so my job was basically to cold call office buildings in a particular market, where I literally, we wanted to understand what was happening in the Maitland submarket because we were thinking about building buildings and we were managing and leasing buildings. So my job was to, I'm sure you guys have heard of CoStar, right? You guys have probably used CoStar as part of your training and what have you. Well, I was CoStar. My job was to walk through buildings, with a stacking plan and kind of walk through and try to guess where the wall was, and then I'd mark it on there, and then I'd go in and call on the client, and I'd try to find out how much square footage they had, when did their lease expire, who was making the decision, and built a picture of the market that way. And I had to do 650 cold calls in the Maitland submarkets to build out this picture of what Maitland looked like. And what ended up happening is, when I got done with that process, I could sit down and I could tell you when all the leases were expiring, I could tell you trends, I could tell you rental rates and what have you. So it was a great training exercise in that. And so it was a natural extension for us at Crowe to move into the brokerage side. So I quickly moved into the brokerage side, and it was a transaction-oriented. We had a portfolio of about 3 million square feet, and my job, I did 150 lease transactions in a year, which is phenomenal training, and I think we'll probably talk a little bit about that as you guys start asking me questions. Hopefully we can get into that. But again, the arc of my career was a function of what was going on in the market. So Crow had reset their business model. They had almost gone bankrupt in the late 80s. So they had reset the business. So I got in when, I was, Trammell Crow version 2.0, and I was probably the 9th employee in that new version in Florida. And so the markets took off. As they started taking off again, it just created opportunity after opportunity for me. So I ended up spending this career at Crow over 15 years doing, I was an analyst, I was a broker, handled one of the largest industrial portfolios in Orlando for several years. I ended up running our property management division. And then I got to work on the development side of the business, built about 2 million square feet in Orlando, started working on the acquisition side as well. And so we were building these buildings for other equity for clients and what have you. Moved into leadership, or actually moved into corporate sales. So if you guys have heard of, real estate outsourcing, corporate real estate outsourcing, I was one of the first guys in that space with our team at Crow. Trammell Crow really pioneered that corporate outsourcing model, and I was on the corporate sales team there for several years, and then they asked me to take over a geography, and I took over the North Florida division. All of that over 15 years, never changed locations, never changed companies, and that's odd. That doesn't happen a lot in our space. The milestones for me, though, and the milestones that I think we'll probably talk a little bit more about with you guys, were a couple of key things that were important. I learned the value of persistence, and I think that's probably even more important for you guys, because our world today is so distracted. I was telling the guys again this afternoon that I'll get home after we have dinner tonight, and I'll open my laptop and I'll have 250 to 300 emails. I'll have another 10 to 15 messages on the phone. If you're sending me an email and hey, Mr. Ellis, I'm getting ready to graduate, I really like a job, I'm probably not going to see it, or it's not going to stand out to me. But persistence, the individuals that call us and hammer on us and send us notes and figure out ways in, and it sets you apart. And I learned that at Crow, because it was, Crow was this this great culture, but it was very much a performance-oriented culture, and you really had to work your tail off to stand out. You had to be the most persistent, you had to be the most hard-nosed, you had to be the most stubborn to really stand out in that enterprise. That's what made it great in some sense. But the other things that happened for me is, and probably a key thing for you guys to think about when and we'll talk about this a little bit later, but I had phenomenal mentors. I had guys like Chip Lilly and Woody Coley and some other guys in the Central Florida markets that really cared about teaching individuals about our business. And they really poured their life into me. And that was as big a factor in any success that I've had, is the fact that those guys gave something up to pour into me. And it remains a big hallmark of what we're trying to build in the CNL platform, that idea of mentorship. We, at our firm, we love this industry. I mean, I really believe it's one of the greatest industries in the U.S. today. It's such a creative, entrepreneurial place. And probably one of the facts that I'm most proud of, I mentioned Paul Reynolds, but Paul is one of several guys that started their career with us many years ago and are still with us. And mainly they're with us because they started out in these roles and somebody really put their arm around them and really poured themselves into those individuals and taught them the real estate business. So it's a business in some sense too that is taught, and there's this apprenticeship season in a lot of the roles, and there's this entrepreneurial teaching and what have you. So mentors were a big factor in my life. And then the other thing is sales skills, and I think it's something we've talked about at the board level at times as well. When I would do that survey and everybody would raise their hand and say they wanted to be a developer, my second question was, well, how many of you have had sales training? And the other, and then 90% of the hands went down. And, we would start, and this is to the guys that want to be developers. We would always ask the question at Crow, development is a blank process, right? So how would you fill that blank in? Development is a blank process. How would you fill that in? And the guys that were here earlier, you don't get the answer. So how would you answer that? So, take a guess. I'm very comfortable with awkward silence. Yeah. A slow process? That's true. How else would you define? Yeah. Transaction process? Okay. Yeah. So that's bingo. And that's how we've always thought about it. Now, a lot of people tend to answer that. They think engineering, they think construction, they think, linear. Development is a marketing process, okay? And in my mind, it's one of the ultimate marketing enterprises, because literally we get to stand in front of this vacant piece of dirt and there's nothing there, and I get to stand in front of you and convince you what a phenomenal building I'm about to build there. I have to convince you to invest in it. I have to convince you to loan me money for it. I have to convince tenants to lease it. I have to convince partners to invest in it. I mean, when I'm the developer, I am constantly selling now, and I would tell you, I believe in what I'm selling. I mean, so when we're selling a product or we're selling a building that we're building, there's a reason we're passionate about it. And I don't think you can be in this business and not be passionate. I really don't believe that. So that sales skills element was something that I learned through that career arc, and it's something that whenever I talk to students or what have you, it's something I press really hard, because you have to know how to communicate. You have to know how to present your position. You have to know how to argue and negotiate, but you have to know how to sell. And that's one of the things that we got taught, that we were taught at Crow a lot. We had a lot of sales training, and again, I go back to that sense that when you talk about development, people naturally think about the building of the building. Well, 90% of the work happens before we ever break ground. 90% of the sales happen before we even start building. And that, quite frankly, development is completely different than construction management. And that's something that people don't often understand in our business. That they think development, they think construction management. You don't want me managing construction, right? You want me out in front, getting it entitled, convincing a city why they need this product, convincing folks why they need to invest in it, but you don't want me building it. You want construction professionals building the building. Now, I know a lot about that side of the business, but it's probably not something you want me doing. So that's briefly about me, and I think I got a better sense about you. So let me try to talk about this web, if you will, okay? Because these are terms that you guys threw out somewhat, and this is what the web looks like, okay? So one of the things that happened, the other thing that happened in my career too, when I was at Crow, I got to be a part of a company that went through a pretty tremendous metamorphosis. It started out as a private developer, right? Almost went bankrupt. Completely separated the asset base from the company, reset the company as a services company, right? Built it out, brought development back into that platform, then went public, and then sold. Okay, so I've been again, back to this, I've only been in one location, but I've been able to work at a platform when it was private, when it was small, when it became large, when it became public, when it bought firms, and when it was acquired. So I've seen a lot in this, and I've worked with a lot of equity sources and clients. Most of my clients were large institutions, but we've worked with high net worth investors and family investors and what have you. So I've been very, very fortunate to kind of see the breadth of our industry, and the best way that I know how to describe it is it's a web. And you guys have thrown out these terms, and let me try to help you better understand, to the extent that you don't, what those terms mean. And so what you see in that circle is, and by the way, this is my perspective, so others may have different perspectives, but this is the way I think about our industry. So you've got debt, equity, consultants, and operators, okay? You've got principals, right? Whoever said they want to own they want to be the owner one day. You've got folks that are principals, that it's their capital, and you have service providers, You have publicly held enterprises and you have privately held enterprises. And they all are very, very different. Okay? And then there's kind of what they do, right? So this web connects. You have developers. You have some developers that are just service providers. You have some developers that develop for their own account, for their own equity. You have investors. Some of those investors are investing their own capital. Some of those investors have to go raise that capital from other sources, and they provide a service to that capital, and they invest that capital for third parties. You've got service providers. That's been a big part of my career at Trammell Crowe and at CB and at CNL, that we're real estate services providers. Some real estate service providers are developers, some aren't. You've got institutional investors. You know, you hear this word institutional capital, and it's kind of a catchphrase, if you will. You've got the big sources like CalPERS and Prudential and what have you. But even in those sources, sometimes they're raising capital for somebody else. So, you know, Invesco sits there, and they're a huge assets under management, but they raise all their capital from other sources. It's not their capital. And then you've got high net worth investors. You've got which is a space that has exploded probably over the last 10 years, which is family offices. You've got families that have created just enormous amounts of wealth, and these high net worth investors often have, either through their family office or through other funds, they're investing in real estate in some form or fashion. And quite frankly, a lot of these high net worth guys are real estate guys. They've made their money on the real estate side, and they're still investing in what have you. And I just threw up names up there, but these are kind of some of the representations of kind of what the space looks like today. Any questions on that? Because there's a lot of moving parts in that, and there's a lot of differences in that. How long do we go to, by the way? Till 5? Is that right? 4? Huh? 5:30. Okay. Any questions on that? It's only going to get more boring if you don't talk. Okay. So, and we can come back to some of this. So, you know, as the dialogue continues. But so let's talk about some of the nuances here in this web, and I'll go bottom up. So there's public and private. Okay. Big difference in the way those firms operate and what have you. And that's not always a scale issue, right? I mean, so when you now when you're a public firm, as Crowe became and was eventually sold in a transaction, scale at some point in that arc becomes the most important thing. And and quite frankly, I think it's a problem in our industry. But at some point, when you become a public firm in our industry, it becomes about how big can you get, okay? That's what the analysts drive you to, and at some point in these models, it's unfortunate, it only becomes about getting bigger, right? And I'm going to sound like I'm against public companies. I'm not. I think there's a reality to what we're dealing in today, that the publicly held enterprises, when you look at them, some of these enterprises are getting massive, and they get to a point where there's nothing else they can do but get more massive, you know? It's the Walmart and Targets of the world, right? I mean, their job is to just get bigger and bigger and bigger. Some things get lost in that translation. They can be great places to learn and start your career, right? Because they tend to have a lot of talent, they tend to have access to a lot of tools and a lot of capital and what have you. And they can be great places to grow, but they operate a lot differently than privately held enterprises, right? Privately held enterprises don't have the pressure of quarterly earnings. Okay, and CNL has remained private throughout its career, even though it creates publicly held enterprises sometimes. CNL has remained private in large part because the founder believes that a publicly held enterprise doesn't allow me to make the right decisions in light of quarterly pressure. So I have to. And I've experienced this. As Crowe was learning how to be a publicly held enterprise, our CEO was very bold one day and kind of stepped forward and said, I don't like the behavior I see because of this quarterly pressure, and so we're going to change the model. And so we stopped getting, I mean, this is bold, this is pre-Enron and WorldCom and all that other stuff. We stopped giving quarterly guidance. We stopped giving, we gave an annual number that we were going to hit, and that was it. And it was amazing the impact it had on our enterprise. And I say that because there is a difference between the two companies. Now, you may not see it when you enter into the job career at the beginning, but you need to know there's a difference in how those two types of firms behave. One's not better than the other. I'm not suggesting that. I prefer to be in a privately held enterprise today, having been in both, but they operate very differently, and scale is really important. Yeah.
From an employee perspective, do you think working in a private, small firm offers equal advantage over a big public firm in terms of corporate bureaucracy, knowing the law, doing friends in the workplace?
Yeah, that's a great question. I don't know that I don't know that I would say one's better than the other. In fact, I wouldn't say one is better than the other. I think it really depends on the individual and what you want to do. Because the flip side to those two equations is that large publicly held enterprises, you may get an opportunity to work on transactions that you would never get to work on in a privately held enterprise, smaller enterprise. My advice on that issue, though, and it's one of the bullet points I'll have later, is that I personally believe that the most important decision you're going to make in your job choice is who's your mentor. Who's the individual you're going to work with. And I could care less if they're in big publicly held enterprise or small private. The individual that you're going to have the next whatever years of your career, is that somebody that's going to pour into you? Is that somebody that's really going to teach you the business, that's going to care about you, or are you just another kind of role for them? So I don't think one's better than the other. I think it's what you want to do. I think you do want to look at growth. I do believe that if you can find a firm that's growing or early stage growing or what have you, oftentimes that will present a lot of opportunity. Like in my career, the fact that I was so early at version 2 of Crow, as it grew, there was just always more opportunity for me to pursue within that firm. And if you're in a big platform, that doesn't always happen. A lot of that growth has happened and what have you. So any other questions there? So principals and service providers, okay? There's a big difference there as well, right? So principals are the individuals that they're investing their own money, okay? And service providers may be doing the same function, but they are often investing somebody else's money. They're often raising that capital. Another difference. I mean, I'm sure you guys have learned about fiduciary duty and what all that means. But it's a different mindset too when you're working for a principal and you're working for a services provider. It's often a heck of a lot more personal, right? Because as a service provider, you've got to have a great track record, and you've got to have a history of returns to be able to continue to raise capital and continue to invest that capital. As a principal, working with a principal who's actually investing the money, when they lose money, it's generally a lot more personal, right? I mean, it's their capital that that they just lost, and things can be a little bit different there. Debt, equity, consultants, and operators. Again, this web. So I can be equity. I can be a service provider to equity as an investor, right? So you can kind of see the web. I can be a principal investing equity. I can be debt. I can be a principal, and I can be providing debt. We see a lot of that in today's world, particularly as the banks kind of collapse. You see a lot of private capital sources providing debt, mezz debt, and what have you. I can be a consultant to the equity. A lot of times in the institutional world, the way you raise capital is you have to go through consultants that are basically just advising capital on who they should pick. Operators. So at the end of the day, what I do in our enterprise and what we do is probably it's easy to define as an operator. So we are the guys, we are the individuals, we are the teams that are out there operating the assets. We build it, we lease it, we manage it, we can sell it, we can start the life cycle all over again. And again, operators can be principals, they can be service providers, they can be publicly held, they can be privately held. And so there's this web that's really created. And so I present it to you really, as you think about it, these are some of the things that you should be thinking about, because it's going to help you understand the personality of the firm or the individuals you're going to work for, because they all operate a little bit differently. And I could spend probably the whole presentation just breaking this down. But as you think about who you're going to go to work for and the types of people you're going to go to work for, you want to be thinking about these types of questions. Okay? They all have different pros and different cons. They all have different styles and different attitudes. They all have different roles and responsibilities. They all have different growth curves. So you need to think about it. Any other questions? So maybe this is, let me talk about what's happening in this industry a little bit more, and then we'll talk about how to think about it. So our industry is not unlike a lot of business industries right now. And we have gone through a wave, which often happens during downturns, by the way, right? M&A activity and acquisitions happen generally right before and during a downturn, as opposed to when things are really up on the curve. And our space has gone through a tremendous amount of consolidation. Okay? And quite frankly, we believe it will continue. Okay? It will, and just in the space that I operate, when you look at what it was like, let's call it 5 years ago. No, let's call it eight years ago, right? You had CBRE, Jones Lang LaSalle, Cushman & Wakefield, Grubb and Ellis. Those were kind of the big, Colliers was out there, but those were kind of the big animals today, right? And you had Staubach, and you had a couple of other firms. Okay, today, CB bought Trammell Crow Company. Grubb and Ellis basically went bankrupt and was bought by Newmark Knight. Trammell Crow was bought by CB. Jones Lang bought Staubach. And there were probably a handful of other consolidations. So that industry changed, in a period of 5 years very, very rapidly, okay? And, if you go to a lot of the conferences that I go to, what you heard was that, hey, this industry is consolidating, it's commoditizing the space, and if you're a middle market kind of smaller firm or you're a boutique firm, you're about to be crushed, right? That size firm, my size firm, is going to be crushed because, the armies are coming. Jones Lang and CB are marching across the battlefield, and they're chewing up everything, and they're creating, consolidation, and the space is getting commoditized, and you need to get out of it. If you don't have scale, you can't last, okay? And I say this not because I'm one of the smaller firms, if you will. I've been hearing that theory for probably a decade or two, okay? So let's look what happened in reality post that, okay? Out of those consolidations and mergers and acquisitions and what have you, today the battlefield looks like you still have CB and Jones Lang, but now you have Cassidy Turley, which is a combination of several firms. Colliers is come back, and they're beginning to build out there. You have Avis & Young, which has gone overnight to, I don't know how many offices they have. And then you have firms like myself and Trinity and Charlotte and some other places out there that are thriving, okay? Because the reality of it is that consolidation, with consolidation, huge opportunities emerge, okay? And quite frankly, within consolidation in our industry, it actually creates, in my opinion, and I think I'm accurate here, it creates as much fragmentation as it does consolidation, okay? So what do I mean by that? Our business remains this really passionate, entrepreneurial, creative business, okay? We do deals. I mean, when you hear guys talk about it, you hear them talk about, the pinnacle, if you will, is we get to do deals. Whether it's lease transactions or equity investments or development, we do deals. It's this passionate, creative, entrepreneurial spirit, right? And guys that are really good at that, the last thing they want to hear is to be told they can't do something. That's our space, okay? We are a talent-based industry, okay? So as these things consolidated, groups like myself said, we'll go build it ourselves. We'll leave and we'll go find a sponsor and we'll go build our own platform because we know we can. Cassidy Turley took huge advantage of this consolidation. They went from a brand that wasn't even on the map in 2007 to now they're one of the top 4 firms in the U.S. What also happens is at the customer level, as these firms start getting larger and larger, they leave behind a whole wake of customers that they can't serve anymore because they're too big. It doesn't make sense for them. And that's not a, again, I don't say it as a negative, it's a scale issue. It's kind of one of the issues I've talked about. It's a scale issue. At some point, well, I'll give you an example. So in my career, when I was on the corporate sales side, we won the Florida Power and Light account, okay? That was a 4.8 million square foot facility management account. Pretty big account, right? Today, CBRE would tell you they wouldn't even go after that account. Now, when I won that account, I mean, I was running around the office doing high fives and dancing on desks. It was one of the biggest accounts we'd ever won in Florida. Today, CB won't touch that account because it's too small. Again, it's not a negative against it. It's a function of scale and what they have to do from a profitability standpoint, okay? And so they create, now that, for my firm, remains a very profitable customer, right? So they create, in this wave of consolidation, some things happen. They start walking past customers that they can't serve anymore, right? They start walking past investments that they can't pay attention to anymore. And it creates a whole wealth of opportunity for firms like myself and others to kind of step into that space. And there'll be another, it's a cycle, right? I mean, there'll be another scale, those brands will scale up. Cassie, I mean, I could show you I may show you on the board, but you look at, you've got CB Jones Lang, you've got Cushman, you've got Cassidy Turley, you've got Avis and Young, you've got Lee and Associates, you've got Newmark, Knight, Grubb, Ellis, Frank, they've got 17 names on their brand now today. I can pretty much guarantee you, call it the next 24 months, there'll either be 1 or 2 mergers within that set, or Jones Lang or Grubb will buy 1 or 2 of those firms. And I could tell you, I'll tell you where my odds are, but that's going to happen, okay? And that will create a whole nother wave of opportunity. And that's what's great about our enterprise, okay? We aren't building a product. We are a talent-based enterprise. And I believe that the folks that are the best in this enterprise are the ones that are very vision-oriented, very passionate, very entrepreneurial, very creative. And when you're a talent-based enterprise, you're in a talent-based industry, the fact of the matter is your assets leave the building every day. Your talent moves in and out of your office building every day. And you got to have a great platform to maintain that talent, to maintain that competitive advantage. But I think the big trend that we see today is that there's still going to be a lot of consolidation. It's happening, by the way, to the folks that are on the equity, that want to be in the equity side, that want to be in that. You're seeing it, you saw Brookfield bought IDI. The REITs have so much capital today, there'll be consolidation there. It's a natural cycle and order of things. But what we've seen happen over and over again, and why I don't subscribe to this theory that the boutique firms or the sub-regional firms or the regional firms will all be squeezed out of that, is that I've never seen it. And every time there's a consolidation wave, a whole new group of folks go, well, I don't want to be a part of that. I'm going to start a firm over here and I'll just create it. And that's what's cool about our industry. I mean, it is this place where you can go create. And you start by learning that in your first job. So, any questions? So, I'm going to start asking questions in a minute, right? So choosing your role. So let's talk about getting a job. Now maybe I'll have some interest, right? These are questions that kind of hit me, right? And we talked about the first one. What do you want to do? I think it's really, really important too to not only think about that first role, and I'm sure you guys go through that, but I'm going to encourage you to really maybe dive deep into this process. But there's what you want to do today, but where do you want to be long term? And I would tell you, it's almost always better if you can see that long-term role at the firm you start at. And maybe that's a little bit counterintuitive in today's world, but I really think, I mean, we see a lot of folks that come in and out of our industry, and you see a lot of job hopping and career hopping and what have you. But if you can find, and I don't say that as a negative, I say it in the sense that if you can see a role where you really have trust in the mentor that you're hiring, and you can see growth in your career at that one company, there's a benefit in that. okay? And there's a lot of benefits in that. There's a lot of benefits in that in terms of wealth creation. There's a lot of benefits in terms of your career, because if you can, oftentimes, value gets created in a firm by how long you're there, okay? I mean, I say that. I was at Crow for 15 years. There was a lot of value created just by being at one place for 15 years. And if you can see that career path to where, here's where I'm start, but there's where I want to be, and it's in that same firm, that's a plus, okay? What do you know when you're thinking about the role? And perhaps more importantly, what don't you know, okay? I talk about this, my son's 17, and he's getting ready to be a student somewhere. And oftentimes what I'm talking to him about is it's okay to realize what you don't want to do, particularly at this stage in your career. And I would say even at this stage in your career, learning what you don't want to do is a benefit. I mean, I say that I started out as appraising. When I started out in appraising, I thought that was what I was going to do, and it took me 2.5 years to realize that's what I don't want to do, okay? Huge benefit in that. So as you think about what you want to do, I would also encourage you to find sources and find resources to really think about what you don't know, okay? What you don't know about a role, what you don't know about a company. As you go through your interview process, you should start thinking about, okay, what don't I know about this company? What do I need to go find out? What don't I know about these people? Okay? Does that make sense? What are my motivators? What is really driving me? It will likely change, by the way, too. Okay? It will likely change. But when you think about, what motivates you, right? You should understand that. And I say that, maybe that's a duh question, but I'm always shocked at when folks come into the industry and what have you, and they don't have a sense for what they're motivated by. They haven't gone through this kind of internal process of, am I risk averse, right? Am I sales averse? Am I commission averse? Right? What don't I like? What do I like? Because if I'm not risk averse, then I'm a risk taker, right? If I'm not sales oriented, or if I am sales oriented, that's a different personality type. You should really think about what motivates you, okay? When those moments when you're, and the best way that I know how to do that is those moments when you're your happiest, right? When you lose sense of all time, usually your motivators are involved there, right? I mean, hopefully you've all had that experience, right? Where you've had that moment where you're working on something, whether it's in school or out of school or at home or in internships or what have you, and you look up and you go, I've been working on this thing for 6 hours and I didn't even realize it. That's usually a sense of enjoyment. It's usually a sense of peace. And you should understand what's involved in those motivators, what's driving you, because it's important. Who will be my mentor? Okay? And I mentioned that before. I think it's, quite frankly, probably the most important thing. Who's going to be the individual that's going to pour their career into me? Okay? And do they have other folks around them that are still with them that they've mentored, right? Do they have individuals that you can talk to that have worked for that individual? Who's going to be that mentor? Now, that's a lot of detail, but I'm telling you, it is probably the effort, it is probably the one issue that I would encourage you to spend the most time on figuring out, because that individual is going to dictate so much in your first part of your career, right? They're going to dictate how much you learn, they're going to dictate how you learn, they're going to dictate probably your career arc early on. And you've got to have somebody that is really willing to pour into you. And you need to find that, okay? Big market, small market. It's intensely different working in New York than it is in Orlando, okay? It's intensely different working in Chicago than Atlanta or Tampa, right? Miami is completely different than, the rest of the world. Big market or small market, there's an intensity difference to it all as well, right? I mean, the folks that are thinking about private equity with big shops and big asset management shops, the stories you hear about your year one programs working in New York, and it's, they're true. I mean, you work 6 days a week, you're working 7 days a week, you're working just unreal hours. And there's an intensity to that. And there's a benefit to that. I mean, you get to work on some pretty neat opportunities that you wouldn't get to work on in Orlando or Tampa or Jacksonville, right? I mean, there's a benefit to that. There's a cost to that as well, okay? There's a personal cost to that. And at some point, the law of diminishing returns kicks in for that kind of career in the bigger markets. And I'm biased. I've worked in Orlando my entire career. But you need to think about that, because the fact of the matter is, working several years in a really, really big market is a great training. It's great experience for you. But you need to think about it, because not everybody likes New York. Not everybody likes Chicago. Not everybody likes Los Angeles. Not everybody likes Orlando or Tampa or Jacksonville or Atlanta. They're very different markets. And you need to, and back to kind of what motivates you, you need to understand that, because where you live during the first part of your career is going to have a big impact. It's likely going to be a place where you stay, right? So you should think about big market, little market. Big company, small company, okay? I think somebody asked that already. I mean, and we talked about it. But there are benefits to both. There are cons to both. And you should think about that. Are you looking for an intense experience working for a publicly held company in New York, which is completely different than working for a small, privately held company in Orlando, okay? The hours may not be different, but the environment's going to be different. The experience may not be different, but the speed may be different. So I would really think about those types of things. And fit is really important. Having said that, I would go back to the point above, which is I would really encourage you to let the mentor trump almost everything. That who you're going to work for during that first part of your career is so critical. Now, what isn't on the list? When your advice on choosing your role, what isn't on the list? Yeah.
I guess pay.
Yeah. It's not on the list, is it?
It shouldn't,
Why?
because with all those other things so greatly outweighed, over time it's going to lead you down the wrong path.
Why? On the wrong path, how? You opened your mouth, so I got you. So go ahead. How's it going to lead you down the wrong path?
You'll do something you don't want to do.
Okay? Yeah.
All of us graduating, I feel like experience and mentors should be much higher on our list of things that we want. I mean, the money will come if we have the right mentors, if we make the right decisions in the beginning. Like, nobody, I'm sure, exactly like Mr. Becker knows, graduated here and made $150,000 a year coming out. I know we all would love to, but I think it's more
What?
But I mean, I know for a lot of us, it's more important is finding our mentors and being in the right company.
Do you all agree with that? Yeah.
Yeah, the mentor thing, that's kind of trial and error, though. I mean, I could get hired at a firm or, a company and
Oh, look.
have the mentality where, like, I'm going to throw you to the wolves and see how you do, and it might not work out.
You guys probably have, there are places that are really, really recruiting you, and there are places that you're really, really trying to get a job in. I mean, you're probably getting both experiences, what have you. But, and I experienced this when we made the decision to leave Crow and CB after the merger. Part of our opportunity is we got a chance to kind of talk to all of the platforms, right? Nobody walks out and kind of goes, our culture really sucks, right? Right? I mean, it's kind of our, you hear the saying in development, every pro forma works. Right? I mean, you don't go to ICOM with a pro forma that doesn't work, right? Everybody is going. You're right. And that's a great perspective and point. There's a danger to that, because nobody's going to tell you if your question is, well, how much are you going to spend with me in my career and what have you? If they really want to hire you, nobody's going to go, not much, right? They're not going to say that, right? So, kind of to my point, it may be the hardest data point to figure out, but it's probably the one worth investing the most in, right? If they have a mentor or if they have a mentee or somebody they've mentored in the industry and what have you, and you can go talk to that individual, you should go talk to them. And you may not be able to find that. It's hard. You're right. And there are trial and error. There are scenarios that, in careers where you kind of get in, you think you got a great scenario, a great mentor and what have you, and it turns out to not be the case. But my advice that I'm leaving you with is it's probably the hardest data point to go figure out, but you should probably invest the most time into it, who that individual is. Comp isn't on the list. I mean, you're right, and I'll talk about this kind of at the end. Because I just, I recognize, I mean, you come out of school, and particularly you guys have invested a lot of time in your education, and you're investing a lot of money, right? And so compensation in that first role is something you're thinking about. And you should think about it. I'm not saying it's not relevant, right? But if you base your decision on just the compensation and you don't think about these other things, I do think that's where you often will end up. These are the most important things, because compensation, wealth creation, opportunities for investment, all of those types of things, they will absolutely be there, and I would argue that they will be there faster if you figured out these things. Okay? They'll be there faster if you figure out these things. So, let me talk about how to get that job, if you will, briefly. And then, hopefully we can keep going and have a dialogue. But the biggest issue I see today in the hiring process and the recruiting process and what have you, and I mentioned this earlier, is that the world is just so distracted. Okay? It is just, there is so much going on and so many data sources and so many inputs and so much access to information that if you do not stand out, it's really hard to get hired. Okay? And I say that to scare you a little bit, but I also would say this, and I mentioned this to the guys earlier. The good news about it is, it's really easy to stand out. Okay? It's not hard. Right? Because I'm so distracted, because I've got so, as an example, using me as a case study field, because I got so much going on, when something is unique or what have you, it tends to grab my attention. It tends to grab my attention, right? But the flip side is, if you have an interview with me, and you email me thank you, and you email me, I'd love to visit with you, on such and such a date, or come see you, or what have you, I'm probably not going to answer the email. And that's not because I don't care. It's because I could spend 12 hours a day at my computer answering emails. Right? And there's this notion today that emails are a conversation. They're not a conversation. And I think if you're trying to get hired by somebody and you think that emails are a conversation, and you're waiting for them to call you back or they're waiting to follow up, and you're not doing anything to make yourself stand apart, it's going to be hard to get that gig. Okay? Because that's the reality of the world today. And you need to stand out. Right? I'm amazed as well at folks that come out of school and folks that come out of graduate school that can't write. Okay? That send me a follow-up letter that's poorly written, poor spelling, poor punctuation, and not interesting. Okay? And it is so critical. I go back to this. That's the scary part. The good news is the ones that are well written and the ones that are crisp and the ones that send me the note and then follow up with a phone call stand out like that, right? The ones that figure out, I mean, I was using this as an example. The ones that want to get into our brokerage program or our training program, what have you, that have figured out what we like, have, in the interview process have somehow struck a relationship and ends up knowing, hey, you like the Dolphins, and so they send me a Dolphin football. I'm not going to do anything with the football, but I'm going to go, that guy's pretty sharp, or something of that nature. But anything that you can do to stand out, I think, because we're so distracted, the good news is it really is easy to stand out. Okay? Now, you can overwhelm all of that by being a heck of a lot more persistent than the next guy. Because the sheer fact of our business is it is an activity-based business, and we like folks that are persistent. all right? If, you two are starting in the brokerage world at the same time, and you make 75 cold calls and you make 50, guess who's going to win? All day long. It's not complicated. A lot of our businesses are not that complicated. And persistence is so key. I mean, I literally, I was not polished. I was not very creative when I was trying to get my job at Crow. I just called them literally 100 times more than the other guy that was trying to get the job. And I would leave a message. I would go down the road. There were 5 guys I was interviewing, and every single day I would call every single one of them. And finally they would tell you they hired me just to get them off their back, right? You can overwhelm style and everything else and setting yourself apart by being persistent. Now you got to be professionally persistent, right? You got to acknowledge that the guys that you're calling on to try to get a job, or the individuals that you're calling on to try to get a job are busy and they have a lot going on, but they notice it, okay? So, leave here today knowing you got to set yourself apart in this process, okay? And at some point, so what is assumed about you? And I remember getting this advice in my career, and I've never forgot it. And it's relevant as you start your career, but it's more relevant as you get advanced in your career. And that is, at some point, it's assumed you can do the job, okay? At some point, you guys are walking out with a degree from the best university on the planet. So we assume that you're well equipped, right? And we also assume, by the way, in our industry that we can teach you almost anything. All right? So I don't expect you to come in knowing how to build a building as an example, but I can teach you how to go build that building and how to go develop that building. I can teach you how to lease space, right? Which is so important in the development of projects. I can teach you almost anything. But at some point, your tactical and technical skills become irrelevant, and it's all about your relationship skills. Does that make sense? It's all about your relationships at some point. That doesn't mean you can be inept, right? But it means at some point in your process, in your job search, in your career, your technical skills are there and they're used and it's assumed you can do it, but it becomes all about your relationship skills. How you interact with folks, how you communicate. Are your relationships sincere? Are they transparent? And it becomes important. And careers arcs change because people have poor relationship skills. And by the way, the individual that advances further and faster may not be more technically competent, but they're better at relationship skills. They're better at communication. They're better at sales, right? And that's important about you guys, right? We're looking for that as we're deciding. How are you on relationship skills? How are you on communicating? Are you pleasant to be around? Those things are really, really important, but they're not taught. But I go back to this process of doing a deep introspection of who you are and what motivates you, and understanding your weaknesses and understanding your strengths are really, really important, because during our interview process and during a lot of other firms' interview, they're going to try to find those things. They're going to start digging in on those things, right? And I'm telling you guys, I mean, I've interviewed a bunch of you guys, a bunch of folks from all of your classes and what have you, and we buzz out the guys that are giving the answers that you think we want to hear. Okay? I've had thousands of interviews, and when you're giving me an answer that I don't know that you're giving me that you think I want to hear, my sincerity button's going down. My sincerity scale's starting to slide down. But the only way you can answer some of those questions is by really understanding who you are and what motivates you and what's important to you and what have you. So, personal responsibility. I think these are the last 2 slides, and then hopefully we can get into some more questions. But I bring this out because I think it's important, okay? I think, and particularly, I believe I'm saying this, your generation thinks about this a lot more, which I think is good, right? But I would encourage you to really think about what it means to you, both personally and socially, okay? Because it's important in the firm that you choose, right? Who they are, what they do, You don't want to have a career with a firm that, eventually has a bunch of bad news, right? But more importantly, what does integrity mean to you? And the reason I put this up here is mainly for one big point, and that is, and this is something my mentor taught me, and he and I would talk about a lot of times, is that a set of personal guidelines, beliefs, integrity, what have you, means nothing until it's challenged, right? We can all talk about integrity and honesty and, all of these things that we hold high, but until they're challenged, until you're faced with the opportunity to apply that, they really don't mean anything. And you should understand what yours are, right? It's important because going back to where you're going to be most passionate, where you're going to thrive, where you're going to have the most enjoyment, it's likely going to be at a firm whose personal values and responsibilities line up with yours, right? Because you really want to believe in who you work for, right? And so if you don't understand what's important to you and what integrity means to you and what all of those things to understand to you, then how can you know if you're lining up with a firm? So you should think about it, particularly in our space, because look, like in a lot of spaces, but in our space, I see it, the gray areas can be huge, right? The gray areas can be huge. We negotiate for a living, right? When I tell you it's a best and final offer, and I know it's not, am I lying? Is that important to me? Right? When I tell you there's another bidder for the property, and there really isn't, is that wrong? These are questions that, I would encourage you not to just blow by. You need to think about these things, and you need to wrestle it, because I'm telling you, you will face them in your career. You will face them, particularly in our space. In all of the roles that you've described, you're handling other people's assets. You're handling other people's responsibility. You're handling other people's money. Right? It's the highest level of fiduciary responsibility, right? Treating somebody else's money like it's your own, or better than you would your own. Right? You need to think about those things. And then finally, and we get into questions. So, traps. Okay? And maybe if you only hear one thing, right? This is the one for your career, okay? Because you're at this point in your careers, almost everybody, not everybody, but almost everybody, where your life is going to start changing like this, okay? You're going to get a new career. You're going to start paying off all that debt, that you just racked up, in graduate school. You're going to get your first job. You're going to get a car. You're likely going to get married. You might have a house or rent, and boom, boom. All of these things are going to start building up. And the biggest trap that I have seen folks make early in their career is that they build a lifestyle that matches their income or exceeds their income. And the reason why that's important is because so many opportunities are going to present themselves to you over the next 5, 10 years. If you've built a lifestyle that can only be sustained by the level of income you're making, it's very difficult for you to move to another opportunity. Okay? In my job change from Trammell, being an appraiser to Trammell Crow, and from Trammell Crow to CNL, both involved significant income hits. Okay? But all three moves created more wealth in my life than anything else that I did. Does that make sense? If I had built a lifestyle that didn't allow me to take those job cuts early in my career, I would have missed out on everything else that presented itself further in my career. And I watch guys and gals come out of school and get a job and make a lot of money, or, quite frankly, when they have their first big jump in income, right? And they've built a lifestyle that says they need X to survive. And you've frozen yourself in place. Because the next great opportunity may start out a little bit lower. But you can't take that. I can't take that gig. Yet, go back to all those other things that I talked about early on. The mentor may be phenomenal. It may be a company that's growing like crazy. It may be a company that just is, full of really talented people and has just got huge opportunities, but you can't go because you've built a lifestyle that won't allow you to leave. It happens, guys. I mean, it happens a lot, and it is a huge mistake, particularly early on. That's why compensation isn't on the list. I really believe pretty passionately about this if you can't figure that out. Because it was something my mentor pounded into me. And I throw up, typically you're going to have two forms of compensation. You're going to have base and bonus, or you're going to have incentive-based commission opportunities. I mean, those are kind of the range of compensation systems. And I watch particularly guys that are excellent producers, build their lifestyle up to a point of what they ever produce, or what they typically produce, and what happens when you have a bad year. I mean, the stress and the stuff that happens, because they built this lifestyle. My mentor pounded into me that, if this is your income, you've got to live a lifestyle here. Right? Because a lot of things happen. I have more freedom to make new choices. My net worth grows up every year more than my peer set because I'm not spending as much money as I make. And I am more prepared for opportunity. And the reason we say that is because the best opportunities often come when? When you're least expecting it, but also when there's the most distress. Right? That's when the real opportunities, and in our space, that's where real wealth creation opportunities occur. It's usually when there's a ton of distress, or right after some event, right after some recession, right? And folks that have built lifestyles that can only be maintained by a certain level of income can't make those moves. It's a discipline, it's hard, right? It's hard because a lot of your peers won't do that, and you get pressure there. Peer pressure, didn't leave when you left high school, right? It only gets bigger. The best thing I've heard is your job. You get out of college and you get a job and make a lot of money to impress people you really don't like. So there's some truth in that, right? I mean, there's some truth in that. So, and the other thing that I would add to this is, and I've talked about this a couple times, is when we look at resumes, I can't tell you how many resumes I see that literally has 6 jobs. So this is probably advice for later in your career, but it has 6 jobs. And each career has, a 2 to 3 year kind of arc to it. And there's 6 of them, 7 of them, 10 of them. That's, that sends off, my personal opinion is that's hard. And I say that because it's likely early on in your career you're going to have opportunities to move around. And I'm not saying don't move around. Certainly, if part of the fact-finding, or the trial and error, the first few jobs didn't work out, or wasn't the right mentor, or what have you. I'm not saying don't move around. But I am saying being conscious of what that says about you in the marketplace when people look at your resume. Because a lot of people put all those jobs and say, look at all this great experience at. I look at the fact that they've been everywhere 1 or 2 years, right? They would look at it and say, well, I had more opportunity and what have you. But as someone who leads an enterprise, loyalty is still important, investing in the firm as well as the firm invests in you is still important. And somebody that moves around a lot of times often sends a wrong signal. And look, I say that too. There's a huge chunk of our industry that's a very mercenary-oriented industry. A lot of high-producing brokers move every 5 years because the next platform is willing to pay. You look at investment banking. I mean, they sign 2-year contracts because they assume that 2 years later that team's going to leave because somebody's going to go to the highest bidder. And I'm not necessarily saying that's wrong, but I'm saying as you think about the early parts of your career, you should be careful. Because as I'm interviewing somebody, I'm going right to those, why did you leave here? 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 I'm going to find those things out. Yeah.
Can you tell us why you left appraising to go to Pro? Why did you leave Pro to go to CNL? Especially for kind of us, I think one of the big things we always know is how do we know when we should make that next step?
No, that's a great.
Did you see the writing on the wall with Pro on the selling, or did you just have a better opportunity?
No, that's a great question. I would tell you that, and I think all of us would say this, if the world hadn't changed at Trammell Crow, we'd still be there. It was a platform that we loved. We grew up in it. There was a lot of trust and loyalty in that platform, and our friends were there, and all of our kids were born while we were there. I mean, all of this neat stuff that happened at Trammell Crow happened to a lot of us, and we probably would have stayed. The reason we left was because in October of 2006, it was announced that we were selling to CB. And then my job was to transition the North Florida business to CB, which I did, and then step back and say, okay, what are the opportunities? CB is a phenomenal platform. I mean, it is the biggest machine on the planet right now, and it is, and quite frankly, the CEO, the COO, the President of the Americas, the President of Corporate Services are all Trammell Crow people now. I mean, it's become somewhat of a reverse merger. All of those guys I know personally, and they now all run CB. It's actually a pretty interesting business case. But it's a big platform. And when we looked at it, we were used to running a very wide open entrepreneurial platform, right? Which is, hey, I want to go figure out how to sell this service to such and such. Let's go figure that out and go create that business. I want to go build this building, so I need to go find the equity, and I'm going to go find the, and it's this very entrepreneurial platform. CB is such a big business, it has to be about compartmentalization. So it's, you are going to do this, and you're going to do it in this geography. Again, I'm not saying that as a negative. That's what they have to do. They're doing what they need to do. That's the right thing for them to do. It wasn't the right thing for us to stay in that because we were just going to be disruptive, quite frankly, as we looked at it. And we looked at it and we said, you know, we've got a long track, hopefully a long runway ahead of us. We all felt, you know, pretty confident in our ability. And
You're kind of like a rebel in the industry, that's kind of like...
No, not at all. You mean Trammell Crow or me?
Well, I guess within Trammell Crow, I mean, you like to do so many different things, like...
No, I meant that about Crow. Yeah, I mean, a lot of people left. I mean, the fact of the matter is a lot of people left when CB bought Trammell Crow, in large part because the cultures were so different. Because we were, I wouldn't say we were a rebel, it was just we weren't used to being put in a box to say, this is what you're going to do. Our business kind of grew because we were all entrepreneurial, dynamic. We can go figure it out. And if you tell people like that, we need you to work in this geography and this product type, they go nuts. Again, that's not a value statement about the people that are really, really good at that, because I know some folks in that platform that are flat, phenomenal producers because that's what they like. They like focus, they like expertise and what have you. I'm not wired that way, and a lot of my partners aren't wired that way. It was just a choice. We had great opportunities to stay, by the way, and that was part of our decision-making process. But I think we knew, and look, it created a window, right? I mean, we are an entrepreneurial, talent-based industry, and all of a sudden, a window opened for us to go build something on your own. And the funny thing about our industry is, when you talk to brokers, you know, when I can go survey you guys 10 years from now. A lot of your answers will still be the same, which is, I want to go build buildings on my own. I want to be the equity. I want to do all that stuff. The fact of the matter is, we had a window to go do that, right? I mean, it was a window that opened up where, okay, if you think you can go build it, if you think you can build it better, you think you can take those lessons learned and go build that platform out, then CNL said, we'll sponsor you and you can go try and do it. So it was an entrepreneurial gift as much as it wasn't a vote against CB. It was this entrepreneurial gift that somebody had presented, and we said, let's take a run at that. And kind of the way we looked at it, you know, the saying that we hit on was, because we had opportunities to stay at CB and go to Jones Lang or go to all these other platforms, but the CNL one was the really entrepreneurial sponsorship one. And what we kept saying was, we'll look at that opportunity 2 to 3 years from now and wish we would have tried it. That's kind of what made our decision for us. And there was 12 of us that made the decision. So we kept looking at it going, you know, I'm going to wake up in 2010 and wish I had tried that one. And we frankly kind of went through kind of a logical process, and we said, you know, we're not going to be worse off for trying this. And it's an opportunity that, you know, doesn't happen a lot in your career. So that's why. in our space, everybody wants, not everybody, a lot of us want to go do that. And there was a window to go do that. So what else? Yeah.
We talked briefly just about Orlando. It seems like it's bringing a lot. It seems like Orlando, all the cities in Florida and the Southeast are really poised for growth over the next
Orlando?
year.
Yeah, there's a lot going on there. And there's a lot going on in Florida right now. I mean, but the good news about Florida is that our population's growing again. And look, that, take everything else away. Florida has to have population growth. And the good news is we're in the top 3 again, which is great. Out of that, Orlando is capturing its fair share of that growth. I wouldn't, so probably the news that you're hearing is, you've got the newest, basketball stadium in the country, which cost, I don't know what it was, $1 billion to build or whatever. It's distracting. I mean, if you haven't been to Amway Center, I mean, it's distracting how much stuff's going on in there. You've got the Performing Arts Center, which is another $450, $500 million project. You got the renovation of the Citrus Bowl, which is another $80 million or what have you. And you've got this tourism industry that's just kicked into high gear again. It's starting to generate a lot of revenue for the city and the county. And you've got tons of residential growth again. I mean, the home builders right now, we were selling a 258 acre piece of dirt residential piece that we had developed and moved through the process. And all of a sudden, we woke up one day and we had a bidding war on it. And then you've got Medical City, which I don't know if you guys have had a chance to tour that, but it is we need to figure that out because it is a phenomenal case study out there with Tavistock and those guys, your uncle's old firm, but it is a very neat case study. Here's the message, though, when it comes to whatever market you choose. Commercial real estate, right, is all about job growth. It's all about job growth. Take all the other technical stuff. Those are important. But at the end of the day, if I don't have job growth, I don't have demand for office space. If I don't have job growth, then you're not buying the G.I. Joe for Christmas, right? If I'm not buying the G.I. Joe for Christmas, I don't need industrial space to store the product. You got to have job growth. And so when you're thinking about markets and where you're going and what have you, you need to be looking at job growth. And the good news is right now Orlando is kind of leading a lot of those charges. Now, Orlando's still a small market. I mean, you drive through, in fact, you drive and you look at our skyline and what have you, it's nothing like Charlotte, and Charlotte's the same size. And somewhat what Orlando has been missing is, Charlotte and Orlando is an interesting dynamic when you look at the two markets. Charlotte is the same kind of population, same number of people in the MSA, but it has these massive benefactors in Bank of America and now Wells Fargo that just plowed tons of capital and tons of jobs and tons of stuff into that city, and that city acts completely different than Orlando does. Orlando, though, is figuring that out. I mean, it's really invested a ton of capital in these things that make Orlando different than a lot of the other markets, the Performing Arts Center and the Amway Center.
Orlando is much of that growth driven by tourism.
It is, and it will always be that way, but it's more diverse than it's ever been. We have a huge defense simulation industry. UCF, again, I'm a Florida grad, but UCF is I don't know what it is, the second or third largest university on the planet, today. It's up 65,000 students. It's massive. I mean, it is huge. So you've got a huge education base there now that just populates the workforce with great people. You've got the defense industry that has the simulation training out by there. That's a huge driver of business today. But look, don't make no mistake about it. I mean, Orlando still today lives and dies by the tourism industry. But it is a massive tourism industry. I mean, it's one of the most visited places on the planet. We have 51 million people come into that airport every year.
Are there other cities that would be less of a one-horse town or?
Well, it's not a one-horse town. It's not. I mean, it is evidenced by the fact that Orlando went through the down cycle as well as any other city, even though the tourism, went down pretty significantly. So, but it's quite frankly, when you look at Orlando, Tampa, Jacksonville, they're all tier 3 markets, or tier 2, tier 3, tier 2, depending on how you define it, right? Because they're smaller cities. They're not, they're geographically pretty spread out between the other cities, as opposed to South Florida. So if your question is what are the more dynamic markets in the Southeast? Yeah, I mean, my opinion, South Florida is the most dynamic, diversified market in the Southeast. From a commercial real estate standpoint, when I think about it, it is unreal wealth down there. I mean, you see things in Miami being built that you don't see in any other market in the Southeast. You see job growth, you see culture, you see diversity in Miami and the South Florida markets like you don't see in any of the other Southeastern markets. The joke, I have a partner in South Florida, and his comment is, South Florida we love South Florida because it's so close to the United States. And there's some truth to that. I mean, it is a gateway to the South American and Latin markets, and it's very dynamic and it's very diverse. Atlanta and Charlotte are, at the end of the day, every market's going to have a personality to it that is the driver. Charlotte has this banking personality. I mean, Bank of America and Wells Fargo, that market lives and breathes based on those two companies. So you can talk about tourism, but you look at Charlotte and you go, if Bank of America, when we hit the financial crisis, you saw entire office buildings empty out in Charlotte because Bank of America and Wells Fargo had 9 rounds of jobs cuts. That's two companies that completely, train wrecked one market. Every one of the tier 1 or tier 2 and tier 3 markets, right? Tier 1 markets being New York, Boston, Chicago, Los Angeles. All of the other ones generally have a personality to them or have a driver to it. Orlando's is tourism. South Florida is, this gateway market. Atlanta is kind of the southern hub of business, if you will. Charlotte has the banking powers. Everybody has a driver to it. Dallas and in our opinions, when you look at commercial real estate, Dallas and Atlanta are kind of in the southeastern, southwestern markets. Those are hub markets in the commercial real estate world. If you can figure out how to operate in those two markets, you can figure out how to operate in almost any other market in the U.S. Because any other market in the southeast and the southwest. But Dallas and Atlanta are very dynamic, diverse markets as well. And Dallas, like Florida, has had, I think Texas is 2, California is 1, Texas 2, Florida is 3 in population growth. But in terms of the markets and your choices, though, I would go back to that original point, which is I'd look for population growth and I'd look for job growth. And where is that the most steady? And to date, probably the most steady place in the U.S. for job growth has been Texas. It's been Dallas. And that market, that commercial real estate market, and we have an office there now, had the shallowest dip and the fastest recovery. And it's actually almost reaching a peak fever pitch right now in Dallas. So, you got a question?
You kind of answered most of it. Being from Florida, from Jacksonville, kind of a smaller market, do you see a benefit or maybe an obstacle benefit to going to a bigger market and going to Texas or going to California, working for a company that you're going to markets?
Yeah, as a contrast to Jacksonville, or any.
Yeah, just later in life, I could see myself going back to Jacksonville, back home, but would it be better to go there right out of school, or see a benefit?
I'd go back through that list. I'd really go back through that list. Figure out what motivates you. I'd go back to, if you were my son and I would give you advice, my advice would be to explore all the options that you can in this first job. So you should, what I didn't do, I didn't go look in Atlanta and other markets. I focused on Orlando because I just wanted to be back home. Now, it ended up working out for me. If I were giving the same advice to my son, my advice to my son would be interview and explore all of the available opportunities that you have, regardless of market, regardless of size, and certainly interview outside of Jacksonville and what have you. But let the mentor trump where you go. Because you will learn more with a great mentor in Jacksonville at a smaller firm than being with a horrible mentor in New York working for a massive firm. Right? Now, you may have some experience differences, but you can figure those things out. So my advice in all of this is to just, you should interview and explore, understand those motivators, understand what drives you, understand what you want to do, but then create as many options as you can to get a sense for that and kind of find that. I wouldn't say at all is a mistake to go back to Jacksonville early in your career, particularly if you have a relationship or a mentor that you just know is somebody who's going to pour into your career. That may be far better than going to a big market and getting a bunch of experience. What else? Anything else?
Thanks for a great
You bet.
conversation.
Thanks.